So, how does a government agency that was born during the American Civil War even begin to stay relevant in an age of AI and digital currency? We're going to talk about the Office of the Comptroller of the Currency, the OCC. Its story, it's not just about boring banking laws. It's really a history of data, of adaptation, and this relentless chase for trust in our financial system. All right, let's get into it.
To really get what the OCC is about today, we've got to rewind all the way back to the very beginning during a time of, well, profound national crisis. Just try to imagine it. It's 1863. The nation is literally at war with itself. The financial system is a total mess. You've got thousands of different state banknotes floating around. Who knows what they're worth? The Union desperately needed a stable, reliable currency to fund the war, and frankly, a banking system people could actually trust. And right out of that chaos, the OCC was born. And if you look at its history, it's really just a series of responses to major crises. Back in the 1860s, it created a national banking system from scratch. Then, in the 1930s, it had to grapple with the absolute devastation of the Great Depression. Fast forward to the 70s, and we see the birth of the Camel's rating system, a really data-driven way to score a bank's health. And of course, more recently, the 2008 financial crisis and the explosion of what we call SupTech, supervisory technology, have completely reshaped its mission again. Every single one of these events added another layer, another lesson learned. But here's the thing. Through all of that incredible change, from paper money to crypto, the whole point of the agency, its core purpose, has stayed remarkably consistent. So the OCC's mission really stands on four pillars. First, it charters and oversees national banks. Second, it makes sure they're safe and sound, so your money is actually secure. Third, it works to ensure they provide fair access to credit and are following the law. But it's this last part, adapting from paper to the cloud, that's the key to its entire modern story. That's where things get really interesting. And this gets us right to the heart of it. How the very act of watching over the banks has been completely revolutionized by technology. Think about the tools for a second. It all started with examiners physically flipping through these thick, dusty paper ledgers, looking for any handwritten mistakes. Now, forget about it. Those ledgers have morphed into these unimaginably vast digital databases, where powerful algorithms can spot an anomaly in microseconds. It's a different universe. And the methods have changed just as much. On-site visits, which used to be the main way to check up on a bank, are now just one piece of the puzzle. Now they're supplemented by continuous, real-time data feeds. Supervisors can literally see risk building as it's happening, not find out about it months later in some stuffy quarterly report. And this points to the final, and maybe most crucial shift. The basis for analysis used to be all about the experience and the gut feeling of a seasoned examiner. Today, that human expertise is still absolutely vital. But now, it's supercharged. It's augmented by artificial intelligence and machine learning that can process more information in a second than any human could in a lifetime. Okay, so with all this incredible technology, all these databases, the real-time feeds, the AI, what are they actually trying to find? What are the fundamental questions they're trying to answer? It really just boils down to these three things. And it doesn't matter if you're looking at gold reserves in 1863 or cloud security protocols today, the questions are exactly the same. Is this bank stable? Does it actually have a handle on its risks? And is it fulfilling its duty to the communities it's supposed to serve? The tools change, but the questions, they don't. So let's take a look at how all of this comes together in the modern, data-soaked world of banking supervision. Today, the language of oversight is this alphabet soup of data frameworks. You've got CAMELS, which is measuring a bank's overall health. There's CRA, making sure banks serve their local communities. CECL, which is all about predicting loan losses. Every single one of these acronyms represents a massive pipeline of data that the OCC has to analyze constantly. We are a long, long way from handwritten ledgers. And the reach of this oversight is just staggering. It's not about a vault full of cash anymore. No, it touches every single digital transaction, every algorithm that approves or denies a loan, and every last line of code that runs your bank's mobile app. It is deeply and almost inevitably woven into our financial lives. So when you step back and you look at this history, over 160 years of it, you see a story that is ultimately about building resilience into the very fabric of our economy. And this, right here, this is the most important takeaway. Why do we have all these complex rules and this intense data supervision? It's because behind every single one of those rules, there's a story. There's a database of a past crisis, a hard-won reform, a lesson that was learned, often the hard way. The OCC's legacy isn't just a dusty old set of regulations. It's a living database of financial history, one that's constantly updating to try and prevent the mistakes of the past from becoming the crises of our future.